The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman, Thursday, October the 20th. I want to go straight to this E-mini 1 minute chart because earlier on I had shown and I said if the E-mini can break above 37.06, it'll start building strength. Well, look at this peak F in the Chapman wave at 8:32 this morning at 37.30, round number high. Pulls back, the patterns that I always talk about, look, here they are. It's just real simple. It's almost like you put a template over your charts and see if it matches. I look only at three patterns: straight line up, straight line down, cup formation and arch formation in the actual price itself. So if it comes down and takes out that left side low, it looks like a lowercase h. It can go quite a bit lower. It did that once. It did that twice. It did that three times, and each one's getting bigger and bigger, the H, the arch formation, and only fractionally taking out the left side low. And look how the technicals were improving. And then all of a sudden it turns around and it goes, and I drew this in way before, after the H formation. And as I was sending a note to the Tiger's Den, I drew this in as a left side, right side price time match. And it said, based on the H pattern that can turn into a beautiful cup formation, this 200 period moving average, if it took it out, that could be very positive. Well, it's gone from the low of around about 36.90 at 9:40 this morning, and it's taken out by 4 bars. That's 1 minute bars. In a quicker time frame, it's gone to a peak D. In the Chapman wave methodology, we're always looking for a buy signal to be upgraded from an identifiable low bar and go at least to 4 higher peaks: peak A, peak B, peak C, peak D. Alphabetized all the way to a G is never an H, but at D, other things can happen. We're at D right now, and let's see if it stalls just for a little bit, or if it re-accelerates and goes to a Chapman wave instant restart. So here we've got a whole bunch of techniques. I was going to show you this in the S&P. I've got it right here. This is live. What we're looking at is within the formations I look at, you've got your H pattern, 1, 2, and then a very big one. I talk about the 200 period moving average. You tell me. I don't have to say a word. Just look at this chart. See this orange line right here? You tell me. Is that a resistance line, resistance line, resistance line for about almost an hour? And then it takes it out and it becomes a support line. It becomes a propellant rather than a repellent. Bam. It goes to the, and what is it doing? You get a crossover of the 9 period moving average above the 14 period moving average right there where it says L, and that is at 9:46 this morning at 3702, and now we're at 37.35, and we've just made a potential instant restart. But what do you do now is you say that's an E, but since it looks very extended, but the stochastic is flat at 96%, you put an E, and in your mind, you don't have to type each one of these in. It's an E, but because it's within 3 bars of that D with a new high, it goes E/A. The A could be a silent A, and you just keep going alphabetically up. But this is where you got to be aware that as long as it's holding key support levels, this is a good sign. But that was a high back at the peak F in 8:30. So you got to consider that there's often after a peak D, after a peak D that's gone above the resistance, there could be, that's the support. So 37.26 right now, 28 to 26 is kind of your support level. All right, let's get back to the nitty-gritties. But all of this pertains to exactly what we look at in the Chapman wave methodology. Let me just run this all the way through again. The Dow Industrials, very strong move up. We unfortunately, rather than flipping, getting taken out at 8:30 on Thursday, I had an opportunity 300-400 points off the low. You know, I love to try to get the low because it gives you such a nice cushion because it can consolidate higher up. But you're just sitting pretty with this. We didn't get that, didn't switch immediately from being taken out back into the long side of it, which is a shame. We are long the Dow. We've actually added an aggressive along. We missed it by 26 cents yesterday on the pullback, but we got it today. And now it's acting very well. So the Dow's up 321. If the Dow, based on the methodology I just showed you, can turn this lowercase h, remember the patterns just repeat, they're like fractals of human nature. So you get a disappointment and then a rally and then an even bigger disappointment, but that disappointment takes out the left side low and immediately turns around. That says that H pattern could become a very positive cup formation if there is a close, and this is based on the Chapman wave methodology, above the arch high, in this case 30,454. Let me just move this down. I don't want it sitting up there because it's not pertaining to that. And what happened? 3 days ago we closed above it. So that becomes, normally I call it gray, but because the stochastic's gone to 82%, I'm now saying we've got a buy signal. I can put an up arrow in. We haven't got a confirmation of a buy mode yet, but the Dow is in a buy signal. And that says there should be a peak C. And if there is a peak C, a leg C above this high that was made a few days ago at right here, 30, remember, I'm talking about the Dow. I'm spending a little time because the Dow, I believe, is the makeup of the Dow at this particular point. It encompasses so many of the positives in the general market, as well as some of the negatives, but more positives than negatives. So 30,428 is the number to break above. If we go to 30,429, that starts leg B, and it will immediately be upgraded to a buy mode, and that says you should go to at least D. Where is my target for this particular phase? Is right here at about 30, I'd say 31,277 was the high in the 15th, and that would be at least an attempt to get a turnaround that can last not just a couple of days, but actually go for a couple of weeks. All right? Weekly chart is still very ugly. Monthly chart, we don't want to talk about it because we aren't even close to the end of the month. Anything can happen. All right. Now let's go to the S&P. I'm going to show you the S&P, but I'm also going to show you what I sent out to subscribers, because I had someone who's done my courses, my Chapman wave methodology, and haven't actually seen you for a long time, sent me a note the other day to say, if I get this, man, it's being covered up, but I'll find it. Okay, there it is. Yeah, he sent me a note and a chart of with the Chapman wave notation. He's a notation of the Chapman wave letters, but it was just too tiny and I couldn't expand it for some reason. So I just sent him back my stuff. And basically what I said is this. Here's the chart of the daily S&P. Look at all the you remember the techniques I just showed you in the 1 minute chart? Would you even know that this is not a 1 minute chart, this is a daily chart, or maybe a weekly? You can't. It's a fractal of human nature, and it gets repeated over and over. So what do we see? Just a big visual, the relationship of the sine wave, where the cup formation reverses and becomes an arc formation. Now we're back to attempting a cup formation. You've got your left side, right side, price time at, I'll talk about it when we get back. No need to rush. The Dow's at 307, S&P's at 25. Basil Chapman, Thinkorswim Technicians Hour, looking at the S&P daily with the Chapman wave methodology. I'll be back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, Basil Chapman. Yeah, we're looking at Berkshire Hathaway. For those of you in the den, you saw that I had no notations there. Of course, I've got Berkshire Hathaway notated in the Chapman from the time before the split, when it was trading at 3,000 something or other. So all I can say is that within the context of, sometimes I lose the charts because the program shuts down a little too quickly and I haven't been able to save, and it goes back to some other archive of my work and I lose some charts. But anyway, it looks very much like the chart I'm showing you here. So look at the arch formation, a little mini arch right to the top of peak F in the Chapman wave, 43.2528 on the 16th of August. The low was 2 months earlier on the 17th of June at 36.36. And look at this left side, right side, left, LS, RS, left side, right side price time match. Exact Chapman wave left side, right side price time match to within 1 day of the low. Look at that. That was based on an earlier notation that I had. But if I do it to the exact day, you'll see that it went to that left side 36.36 was taken out. But the actual low itself was at 34.91 on the 13th of October. Isn't it fascinating how the middle of the month it keeps coming into play? 2 months to the top, 2 months to the bottom. And now what we're looking at is there's the H pattern. There were 1, 2, little bit. I'm going to skip that one. 3, and this is the big one, 4. And now we've got a very large one, but it looks like the stochastic is finally moving up. This was up to yesterday, 55, 56%. On balance, volume has been worrying me quite a bit. But look at this. You've got all the patterns I'm talking about. Here's the Chapman wave falling axe formation with the Chapman wave inside track repellent zone coming up, and that's at about 37.90s. Now let's get out of this and go live. And what we look at is the Berkshire Hathaway chart. It doesn't matter. It could be they look the same. S&P, there we go. Oh, I typed it. Oh, I just wiped out that whole notation there. Got it back. Okay, good. All right, now we're going back. So this was for Bob. From Framingham. Bob, yes. So I sent it to you. I don't know if you had a chance to look at it, but now let's go to this, which is the S&P live as we're talking live. Look, it's the same thing. There's the huge cup formation. as I say, the 2-month low on the 17th of June, the S&P up to the mid-August high comes down. And now what we're looking at is that the MACD has improved. It's not great, but it really, look at the histogram. That's the vertical lines that essentially gives you it gives you the statistical right there. It's called the 0% line, and the stats are saying that this visual of the green above the 14, this 9-period differential above the slow-moving 26-period exponential moving average has been very strong, and it started being strong on that low that was made at 35.84 back in late September, early October, and then the latest low on the 13th of October was technically the veracity of the technicals was such that it was on balance volume that was deteriorating, but everything else was working. And look, we're within, I'd say, another 3 to 4 points, and that 9-period moving will pink 9-period moving average will finally close above the 14-period and go green. We haven't seen that since it broke down way back there in late August, and that was just after in the Dow we had shorted before the big move down. So we're staying in that as an intermediate term position, but shorter term, we're quite aggressively long the Dow. So that's the S&P. So Berkshire Hathaway, BRK.B, question came in. And look, it's very similar. So what you've got is a nice move up. The MACD is good. Stochastic's actually at 82%. The on-balance volume is still lagging, and that's the reason why we haven't had this takeoff pattern that really. And you can see the same thing happen on the takeoff back in June. The on-balance volume waited until it finally turned up. And as it was moving higher, now this is looking at the on-balance volume is Joe Granville, late Joe Granville's technique where you add, it's a running total of the price, and on an up bar, you add it to the running total, and on a down bar, you subtract it. Well, it took a long time, as it did right here in June, right through July, through mid-July, before the on-balance volume really picked up. And that's where it soared right through, Berkshire Hathaway soared right through the 200-period moving average, the 200 and around about 260 low that was made back in mid-June, screamed up to 308.18, comes tumbling down, look, left side, right side, price, time match, misses it by 3 bars and goes, actually, it broke it sooner than that. Then it rallied, and then it broke it completely. Went to the low of the 13th at 259.83 and trading right now at 278. It's looking okay. Personally, out of the financials, I would prefer to be looking at something like a Bank of America. Look, isn't this a much better chart pattern than the Berkshire Hathaway chart? We are long. We're long from right right here. We're long from right there. So let me put that in so that you know what we're talking about. I just wanted to, for full disclosure, we are long for subscribers to my opening call. Ran from the 31s where we went long to 35.36. I happen to think that the financials are very important in this particular phase. I want to see the financials doing very well to be able to confirm for me that this has legs, the move itself up, XLF. Not as good a pattern, looks very much like the Berkshire Hathaway chart. So as an overall picture, the ETF is not acting as well as maybe an individual stock as the one that we've got. And that's just for the moment. That could change very quickly. But in the meantime, as far as I can see, this is going to be important. I've also said the IAI, which is the broker deal. Type it over here. The broker dealer index, or ETF, IAI, that's acted much better. It didn't take out the left side low of July, actually, of 80.63. The most recent low is in the 84th, but it's really struggling. I want to see this with the financials moving up together with the general market. And then I'm going to say, hey, this has legs. At this particular point, it's just isolated things. Talk about isolated things just to rub it in. We were long Shopify for the first time in a long time. We got in 2 days ago. I made the stop just a little too tight, and it just took it out yesterday. And here it is up 220, up 7% today. That's just the way it goes. It's maybe not too late, because I believe that the stocks that got hit 80 to 90% are the ones that are going to find a little bit of support in this particular move. We were along 28.71, just got stopped out in 27.91. I don't know why I made it quite so tight yesterday, but we did, and here it is at 30.55, Shopify. Don't get too carried away. This has been one that's been so damaged. And look at the weekly chart. Look at it has to start trading in the 42 to say goodbye to that whole consolidation that I took 4 or 5 months over. But it hasn't got the yet. Basil, Chapman, Tiger Technicians Hour. I've got a bunch of questions coming in. I need to do that. But let me just go to the E-mini.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So a couple of questions just about the weekly chart of Berkshire Hathaway. Yeah, this is a dreaded H. It did take out the low in 2 bars and went above the left side high. This is important, but what I said, Berkshire weekly chart needs at least 287s. It's at 279 right now, so it's about another 8 points higher next week to be able to see whether the MACD crosses positive in a beautiful W formation. The on-balance volume, the on-balance volume is acting very well. Stochastic still very weak at 19%. So that's the way I like to go step by step. I don't want to get too carried away with anything because this is just not a market that is well, I'll just show you right now. Look at this. The QQQ, good example. Look, the QQQ, nice candle today, walking the 14-period exponential moving average and the 9 and the 14-period moving average. But look, it's it's working so hard. Yes, the MACD is good. Yes, the stochastics 52% is good. On balance volume is not bad. But look how far the pink 9-period moving average is away from the 14 in the daily chart. And look at that weekly chart. A lot of work needs to be done in these. But in fact, if it can get done, if by the second week of November, for whatever reason, the QQQs, instead of being down at 249, or reverse it and up over 294, or even higher than that, because it has to break this downtrend Chapman wave inside track repellent zone, that would be very good action, and say, hey, you could keep going even further, maybe going to Thanksgiving or so. So just one step at a time. Yes, I did. A question came in. Yes, I did call that a peak F for those of you who are watching my E-mini notations here. I called it a peak F. I put a question mark. I was about to put a down arrow, but I really need to be faithful to my technique, which said just wait another tad to see if it goes underneath the, if the price starts to hold under the 9 EMA and it turns into an S. So actually that is what I was about to do, and then I didn't because I was busy in the middle of. Look how quickly you can do the notations. I lost all the notations in Berkshire Hathaway. I've notated Berkshire Hathaway. Oh, I could easily say 100 times over the last 20 years. But that's not the point. It just took me that break, that 2-minute break or whatever in the commercial. I did the daily, the weekly, and the monthly, not completely to the beginning of Berkshire Hathaway, but at least to the most recent couple of years. So it doesn't take long to do. You just notated the way I did it. Okay, question came in now. Okay, now I need to go to about, let me see. All right, yeah, I'm not going to actually answer that because I've answered it every single day. Paul, I don't know what you want. I mean, if the price is, if the analysis is correct, then I don't even understand how you can say that I don't understand it. There is a doji candle in the TBT. The on-balance volume is now overbought. The stochastic, though, is flat at 91%. Now, these are techniques that I developed. These are proprietary techniques in the sense I'm talking them out loud, but that I discovered myself. The MACD is holding really well. The 9-period is way over the 14, and the price is way over the 9. This is extremely bullish. That can change, and it can change on a dime, but we haven't got the dime yet. So all I can say that the intimation that this market could see follow through to the upside is right there. If I look at the TBT and I say by any measure on a visual basis, not a mathematical, just a visual, this move up in the weekly chart of the ultra short left Lehman 20-year T-bond ETF from the left side high of June the 17th, the week of June the 17th at 29.56, it comes down. The 9-period moving average did not break under it. Show me a technique like this. There is none. It held, and it said, be careful because we could make a cup formation, which I drew in with a left side, right side price time match. Show me another technique that does this. No, there aren't any. Left side, right side, price time match. And look at that, right there, right there. And it breaks out. The MACD goes back to very positive. The stochastic rallies over 80% in the weekly, a weekly chart at 94%, a monthly chart at 82%, leg D in the monthly, and look at the move to the upside. It's done almost a 1-to-1 to the right. But that's not my point. My point is, it's done it without a single peak from the low that was made on the week of the 5th of August at 23.34, trading right now 13 points above that. It's about 30% above that move alone. And what are we looking at? It's still in the same leg up, G/A. So I don't know what you're talking about. I don't know if you know what you're talking about. So all I'm saying to you is don't. Give me some cogent criticism because I don't know what you're talking about, okay? At this particular point, there's a doji candle extremely overbought. It says that if this market was to go higher, it would be fantastic for the market if out of the blue, the TBT creates this doji, and either tomorrow, Friday, or the beginning of next week, we see a move underneath. And all you can do about it now is talk about probabilities. I'm trying to anticipate what can happen next. It's a fool's errand. All you can say is that at this particular point, at 10:36 a.m. on Thursday, the 20th of October, there is a chance that little doji candle is going. Let's go to the 120-minute chart. Actually, I'm not going to waste time on this. All I'm saying is that the only way that this will change its course is if there's a pretty violent move and it starts to trade under the 14-period moving average of 33.63 by Monday or Tuesday. I don't think that's going to happen as suddenly. It could start a move down, but that's the only way you're going to get a vicious turnaround. But if the yields, TNX.X, which now I've got an alternate count, I can say that this is a potential, it is a potential D in the daily, and it's not that in the weekly. So this one is all over the show in the A, B, C, D, possible D, right here in the TNX, the 10-year T-note, leg D in the monthly. I don't know what the count is here other than I have to call it a B in the weekly. There's a mixed picture, but this is the root. It's not the TLT. The root is the TNX itself. And that is just saying, so far it's extremely positive, and 89% in the stochastic and the daily, 92% in the weekly, and flat. So those are the parameters I need to be watching. That's all. And it will help the market if the TLT starts to rally, because it'll say, oh, okay, yields are maybe coming down now. And look at this little move right here in a G/C in the doji candle. And look at the oversold condition on balance volume. We are close. UNG is another one. UNG is a doji candle. I think there's a chance that within another 3 days, we're going to get a sudden, I don't know if it'll be violent, but we're going to get a sudden turnaround in some of these absolutely just decimated, very important areas like natural gas and bonds. I'm saying it's possible. Probably. But it's not a secret. I'll be back now.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me do this. Look, HGX, what is the HGX? HGX is the Philadelphia Housing Sector Index, making in the lowercase h, which I believe, and I said before, I think we'll go to a lowercase m pattern. It might take a little while, but we're watching this because if it takes out very sharply the low, if it actually goes at 352.91 right now, if it manages, I don't know how it will do it, but if it manages to go above 380 in the next 2 weeks, that is fantastic action. Tomorrow is Technical Friday. I want to talk about something that could be the biggest surprise for everyone. I don't want to talk about it just yet, but it relates to the home builders. It relates to W, which is the continuous wheat contract. Here we've got the Chapman wave, an unconventional flat-based restart. I usually make that pink right there. It's because pink tells you that it's going back right there. So basically what we got is the Chapman wave instant restarted that peak D right there, and that was early September. 3 bars later went to E, but remember you count E/A, F/B, and then it pulled back very sharply, but it didn't take out the low bar of leg D, not after to make peak D, but leg D, and that would be at 809.25. Years ago, when I was working very hard on the instant restart, there was a pattern that seemed to fit exactly, but it took out the trough of after D to make that low to start a brand new move. And then the price ran up, but it kept coming back very sharply to the whole candle of D, even though it kept going higher. And I finally figured out what it was. It wasn't just a flat-based restart where it's like an instant restart that keeps coming back. It's one that is violent and keeps coming back. And then it says you can go to D, even EF. Those of you who do Chapman wave methodology, you know exactly what I'm talking about. And it looks very much, I haven't even seen him for years, like what is Homer Simpson's son, what is the kid? And he's got the hair that goes, he looks like an M or a W for me. He's got this spiky hair up and down, up and down. So it looks like his hair. And finally what happens is it comes back and it takes out, it goes all the way to all the support levels and takes out the low bar. And the low bar in this case is either 890.25 in the continuous contract, or the actual low of that, which is 809. And here we are at 844. So I'm suspecting that wheat is in a sell mode in the daily, sell mode in the monthly, and moving this over, sell mode in the weekly after a peak D. Remember the Chapman wave peak D is where other things can happen. Tell me, did other things happen there and there? That's 114.08 spike. Remember back in February or so? And it goes down to the 750s and then pops up and now it's at 845. That's wheat. This pertains to, if I remember correctly, I better put it down here, Friday. Surprise. I'll put surprise and I say, what was the surprise again? I'll put down what the surprise is, so don't forget. There we go. Look at this. Soybean. from the high that was made at about in the 1500s. It's gone all the way back, peak E in the daily, and it's doing the dreaded H pattern. Yes, it's finding support at the 200-period moving average, but that's a magnet, not yet a propellant. And here it is with an arch formation in the weekly and a peak C in the monthly. So I'm suspecting that together with corn, which is having a very nice day today, 7.5 points up at 685 3/4, that this is the one that will hold better, but altogether put it together, made a peak D and it's pulled back, but it's holding very nicely. If you go to sugar, which is also part of this, the DBA commodity ETF that we are still long, which is trading today up 4 ticks at 20.03. There's this little double top, and I'm watching it. That's sugar. So there's a sense to me that we could start to see, and let's look at crude oil. It's part of the commodities pulling back. It's up $1.56 now. It's been making, it's been repelled at the Chapman inside track. So there's a chance that we're looking at commodities, and I have to put it together with the invisible commodity, which is really the Treasury bond yield. And I'm saying that we are right on the cusp of something that could be very different, and it could be the start of a cusp. In other words, it doesn't have to be one day. It just could be being implemented, and it could come in as a little bit of a surprise, but it could really change what the Fed is looking at. Clue? Okay, now let's get back. Okay, now we go. Amazon, there we go, Amazon. Amazon's acting very nicely today at 117.75. I said that the nibble could become at least a more, perhaps intermediate, only in the sense I'm not talking days, I'm talking weeks of a rally. It's not a great pattern at all, but it is one of the leaders in the whole RTH. That's where I stopped yesterday. I was looking at the retail sector. Horrible looking chart in the retail sector in the daily, weekly. Funnily enough, the monthly chart has the dreaded H pattern. So far it's holding well, but let's go to the XRT. So this is 20% is Amazon. Now we go to the real thing, which is the XRT. This is the equal weighted S&P retail ETF, and Amazon doesn't have the same impact on this. It does have an impact, but not the same as it had on the other one. And it's already in a C. It's already started the H pattern, which yes could become a lowercase h, right here, to a lowercase m. But I'm watching this because if for any reason, and I don't want to talk politics just yet, I will be talking politics, not politics, but politics in relation to the market and what's being anticipated. We don't really see it yet, but over the next week or two, we'll see if the market is anticipating that maybe there's enough potential for a change that it does impact the OIH. Oops, typed it in the wrong place. The retail sector will be helped if there's a general market move to the upside, but as of yet, it's still stuck in the lower range. Let me go to, what was I talking about just a moment ago? I did the retail. Oh, I just wanted to do this before I forget, because the VIX index is very important. The VIX index has had just red candles since the high that were the reversal from last week, the doji candle, with a double top at 34.88 on the September high, and then 34, I think 58, something like that. I should type it in. I'll do it right now. Right there. Okay. 53, 34.53 on the 12th. I may as well just type it in. Oops. 12. So that's very important, I think, because it's saying that there could be enough buying to come into the market so that there's slightly lower highs and lower lows in the VIX index. Today it's down at 51 cents at 30.25 because the S&P is only up 30. The Dow is up almost 300. There's a big difference, and that's what I've been saying. I think the Dow is the leader right at this moment. So with that said, I'm saying to you, watch the VIX index, because if by Tuesday of next week, the VIX is trading in the low 29s, maybe even touching 28, That's really going to help this market move higher. And that's what it needs, because even today, it's a very selective move. I'll be back. Basil Chapman, Dow's up almost 300.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yes, I was asked if I'll do a little bit more of this, so that intraday charting in real time, so people can see how it relates to either positions we have or what I'm talking about and analyzing. I'll try to do that. In the meantime, back at the ranch, yes, Exxon was spoken about. Yesterday, I mentioned that it's acting very well. It looks like it wanted to go to the previous high of 105.57 that was made the week of the 10th of June. And today's high is 105, round number so far. So the question came in, about CVX with a round number. You remember, round numbers give you a clue. And they say if there's a pullback or a reversal from that round number and it goes in the reverses direction, then that becomes a number that you have to watch closely, because if it takes it out, it means it's ongoing in that direction. That's all it means. So yesterday did today's round number 169 on CVX Chevron. I normally would type that in because it's in a leg D, and it says we might be very close to at least a little bit of a pullback, because look, it's still underneath the 182.40 high of June. And it did go down to the 130s. That's a 50-point move. That's a big move. So this is a very nice rally. But if I draw in just a mini trend line right here, look right here, on Chevron, we're testing it right now. We're about to break out of it. So all of this is saying, don't mess around. Don't even think of shorting anything in this particular area. The oil, certainly the multinational oils, are acting extremely well. All right, we're about to wrap up. I'm going to hand you over to Steve Rhodes. Great programming here all day. Don't forget, Wednesday a week, Teddy gives his webinar, and I think they catch that. And to be rich, he's made fantastic calls, especially on crude oil and the dollar, many others, but certainly here publicly with Tommy O'Brien in his interviews on a Wednesday. So Wednesday a week, there's a webinar. Have a wonderful rest of the day. Watch that VIX index and so forth pulling back. See you tomorrow.